Good morning, I'm Carol Harmer. Now, as you know, I've been really not liking the euro very much for reasons I explained last week in a video. You can see that today we have broken down. All right, now we've just kissed this trend line here that I was telling you about last week. It comes in at around today 116.49. So anywhere in that region, you're going to see buyers. Please don't chase this market. The States don't like markets moving without them being there. So they do like to push it back up. On Monday, really, you should be going through your charts. Well, you should have done it Sunday night, really, and making your strategy for the rest of the week. That's what I do. I also, as I've explained, looked not only at the euro against the dollar, I look at euro Swiss, euro yen, euro CAD, euro Aussie. You know, I like to make sure that everything that I'm going to be saying is correct. And also the weekly charts. I cannot stress enough how the weekly charts will help you. I'm not suggesting for a nanosecond that people trade off of a weekly chart, because we'd all be old and dead and bored to death if that was the case. However, when the trend is starting to change, or not even starting to change, but when you're seeing it's going to be a correction, you will find that the longer term you go out, the more information you get. And as a trader, you need as much information that you need as possible. You need that. So you need to know where the weekly charts were. You need to know that the weekly charts were showing extreme overbought indicators. You need to know that they diverged. That in itself was enough to put a halt who goes there in this market. And hang on, what are the chances? Anyway, back to the weekly charts. They diverged. It puts a stop on what you're doing. It's like, this isn't working out. If you look at all the information and the data that the euro was telling you, you know, these candles here, even if it's a bar chart, I trained myself on bar charts, actually. I trained myself on point and figure charts. I don't think we had bar charts back then. Anyway, all this was telling you something, all right? Now watch, we've gone back above the 50-day moving average. If we break this 116.5, you're going to see the market go down. First stop, I would say, would be the 61.8 level, which is coming in at 15.92. So around that area, right? You're going to get 50, 60 points out of it. Now, obviously, if that 15.92 breaks decisively, and I don't just mean it blips and goes back. It's got to break it. Normally on the second go. That's what I do. I'll wait for it to break. It normally goes back. That gets rid of the algos, and down we go again. So watch these levels. They're really important. The Dixie's turned higher. I'll do a quick update on the euro crosses when I've answered the phone from the website lady. Okay, well, look, good luck with the euro, and I hope that people were short or thought about getting short, and please, you know, not have been long of the damn thing. Okay, and I'll catch you all later.